Hey everyone and welcome back to my channel. Today we are going to talk about something that every investor needs to know: how to build the perfect stock portfolio. But here's the thing, there's no one size fits all portfolio. The best portfolio depends on your goals, risk tolerance and strategy. So in this video I'm going to break down 4 different portfolio strategies and show you how exactly they should be structured. 1. A full ETF portfolio. For passive investors who want simplicity and diversification. 2. A growth stock portfolio. For those aiming for high returns and are okay with some risks. 3. A dividend growth portfolio. For long-term investors who want both growth and passive income. Or 4. A high dividend portfolio. For those who want maximum passive income right now. I will also explain which ETF and stock fit each strategy and why. So if you want to build a smart, well-balanced portfolio, keep watching. Section 1. Full ETF portfolio. The passive investor's dream. Let's start with the simplest and most effective portfolio for most people. A 100% ETF portfolio. Who is this for? Investors who want low risks, people who don't want to research individual stocks, those who just want to set it and forget it. How should it look? A full ETF portfolio should cover the entire market for maximum diversification. Here's an ideal allocation. A 70% a global equity ETF like an MSCI World, who covers stocks from all over the world, and 30% an emerging markets ETF that give you exposure to fast-growing economies. You can also tweak it to your needs. For example, you can include something a little more risky like a leveraged MSCI USA ETF. If you want to invest more in tech stocks or stocks that are good for the environment or something completely different, there are ETFs for that as well. This portfolio requires zero stock picking skills, is low cost and performs well over the long term. Section 2. Growth stock portfolio. Maximum upside, higher risks. Next up, we have the growth stock portfolio, a portfolio built for maximum returns. Who is this for? Investors who are okay with volatility, those who believe in high growth companies, and long-term investors who want to beat the market. How should it look? Since growth-based stocks can be volatile, I would still recommend at least 50% in an ETF for stability and diversification. So, there would be 50% in a growth-oriented ETF, something like a Nasdaq 100, and then 25% in tech giants, for example Apple, Microsoft, Google and Amazon, 15% in emerging growth stocks, think about like Tesla, Nvidia, Shopify, and 10% in high-risk growth stocks, which includes smaller cap companies with huge potential. This portfolio maximizes potential returns, but be warned, growth stocks can crash hard in a bear market. Section 3. Dividend growth portfolio, the best of both worlds. Let's talk about the dividend growth portfolio, perfect for long-term investors who want both capital appreciation and growing passive income. Who is this for? It's for investors who want passive income that increase over time, people who still want good growth, and long-term wealth builders. How should it look? Again, 50% should go into a solid ETF for diversification and less risk, but this time we focus on dividend growth. So 50% in a dividend growth ETF, like for example the Vanguard Dividend Appreciation ETF, or just an MSCI World that pays out the dividends. Then 45 to 50% in individual dividend growth stocks, which include companies with consistent dividend increase, like for example Johnson & Johnson, Procter & Gamble, McDonald's and Home Depot. And then, if you want to, you can put 5% still in growth stocks. This portfolio is great for long-term wealth creation, as dividend growth stocks tend to outperform the market over decades. Section 4. High dividend portfolio. Maximum passive income. Finally, we have the high dividend portfolio, built for people who want high monthly or quarterly payouts. Who is this for? It's for investors who want maximum income right now, retirees or those who want to live off dividends, and people who don't mind slower capital appreciation. Just as a tip from me, if you're still young and you want passive income, don't do this approach, you are better off in the future with dividend growing stocks. Anyways, how should this look like? This time, 50% should go into a high dividend ETF, but the focus is on yield, not growth. So 50% in something like a Vanguard high dividend yield or S&P 500 high dividend ETF. Then 30% in high yield dividend stocks, so stocks that pay 5% or more in dividends, like Altria, AT&T, Verizon and Rio Tinto. 10% should go in REITs, which are real estate investment trusts like Realty Income, Medical Property Trusts or WP Carry. And then 10% could go in high yield bonds, or if you want to be a little safer, in a high yield bond ETF. This portfolio provides a large dividend payout but has lower long-term growth compared to dividend growth strategies. So let's wrap this up. Your ideal stock portfolio depends on your goals. You want simplicity? Go for the full ETF portfolio. You want high returns? Try the growth stock portfolio. You want long-term dividend growth? Pick the dividend growth portfolio. Or you want maximum income right now? Choose the high dividend portfolio. No matter what strategy you choose, the key is consistency. Keep investing, stay diversified, and don't panic during market crashes. Whatever you pick as your ETF or stock, always make sure you do your own research and always keep up with most of your single stocks in case something happens. Which portfolio strategy fits your goal best? Let me know in the comments. If you want me to create a complete portfolio for each of these strategies, let me know in the comments as well. Like and subscribe for more investing tips, and I will see you in the next video.